So from your vantage point, there's a lot of misconceptions about green, ESG, how you invest in it. What's the biggest misconception that people usually have?
I think that's a great question.
Thank you, I try.
Oh, yeah, no. I think the biggest misconception. So I think one of the big challenges for sustainable finance as a whole is, and this isn't actually a misconception, I think this is a reality, is that we've kind of got lost in our own alphabet soup of acronyms, taxonomies, frameworks. And I mean, for those of you in the audience and listening in, they're in this space, you're probably a master of all these different types of transactions and ways of typographies. So I think one of the big misconceptions is that we can sort of somehow channel this capital in a way that sidesteps those issues. Like I do think it has a very key role to play. And to do that, we need to give investors confidence and we need to give regulators confidence that when we say something is green, it is green. And unless you're being very transparent and set that taxonomy, it's very hard to do that. I think a misconception on the other side, though, is, and I say that as I think a criticism of the industry I'm in, is that also that's it. Like, we actually do also need to think about not just how you drive, if you like, a reduction in the emissions that is in that ring fence, but actually how are you driving real world decarbonisation? And I think one of the big areas where I see that as being a particular challenge is in emerging markets, where I think a lot of these taxonomies have been defined with a sort of developed world perspective. And the unfortunate unintended consequence of that is that in some ways it makes it even harder for emerging markets where they have the biggest sort of risk from climate change and the biggest vulnerabilities and also the biggest opportunities to leapfrog. So I think that's kind of one misconception. The other one I think is that this is a sort of, from a financial sector's perspective, this is an area that requires a reduction in sort of revenues. And effectively this is all about subsidizing in some form or another. And actually I think where you can really see a transition coming through, and as you scale this up, I think you can build sustainable business models, whether it's in the real world economy around technologies, companies, the transition of these companies, or in the financial industry around how you move this capital to work to drive decarbonisation and more sort of social purpose.
You use the word subsidizing, and I'll bring up another S word here, which is sustainable. It's in your title. One of the issues with subsidizing, and I'm thinking of farming as an easy example of how this works globally, is that it's not seen as sustainable, especially when you're talking about growing debt levels around the world. How do you square the two, the sustainability with the subsidization?
Well, I think that's exactly right. And I think I think that to catalyze new things, you often need, particularly in the time frame that we're trying to catalyze it, you may need a pump priming of some sorts and that subsidy. But once you get to scale, you should be able to move beyond that subsidy to really move into the global space. And if you look at, if you look at sort of in the private fund space, you're now seeing, people like Brookfield and others raise tens of billions of dollars of capital to deploy into transition and decarbonisation. They're not doing that because they don't think that's a good idea. They're doing that because they see a significant business opportunity. I mean, what we're trying to do in this rewiring of the global economy is move an industrial revolution at sort of extraordinary speed. And to get to the sort of levels of emissions reductions that we need to see in this decade and in the next decade, you do need to find ways to accelerate the spread of technology that would probably take a lot longer otherwise. And that's where the subsidy comes really critical. But both the private sector and the public sector have limited capital. So I think we need to be really thoughtful about how do we employ just enough capital or subsidy, to use your words, to catalyze, but not enough that you create an unsustainable business model where you just are not able to bring in other capital. And I'll give you an example from my past, and I think we were just talking about cocoa farmers and others. I mean, I looked at off-grid solar in Africa and the financing of that a long time ago. And one of the big challenges for a bank to look at that, and we were very focused on trying to do that, was that the way that they were financed at the time was all development money. And it was all grant money. And so they had no credit history. They had no ability for a bank to go in and say, okay, well, I can see what is becoming bankable. And that wasn't a sustainable business model. Now you're seeing some of those companies consolidate, get to a size where you are able to put global capital to work. So I think this sort of balance between what is catalytic versus what is subsidies goes to heart a lot of the challenges.
What about the affordability piece of it? It feels like we're talking about this green transition, and to get to the point of the scale that you're talking about, you have to put in that money to begin with. And yes, a lot of it's being government funded at the moment. But a lot of people are looking at the green transition, whether it's, I'm going to go as simple as EVs or sustainable finance or whatever, insert your green activity here, and saying that's a really expensive thing to be doing. You've already seen certain governments, the UK government included, pulling back on some of that because it's so expensive. How do you make sustainability affordable?
So I think this is one of the great challenges that we are also facing at the moment around how do you make this shift so clean, how do you also make it affordable, how do you make it just and equitable at the same time? And so we are balancing these different things. But look at the success of things like solar and coming down the costs over the last sort of 10, 20 years. You've seen sort of 90% reduction in the cost of solar panels, to the point now when there was a story in a competing news agency about solar panels being used effectively for fences because they are so it was so affordable. And I think it's just a really powerful example of when you get to scale, when you get to that level, you can make it affordable.
Yeah.
And I sort of think that can be deployed in lots of different technologies as well. What we're all trying to work out is exactly when is that tipping point that something gets to that scale, affordability, and really then gets an ability to go at a much, much bigger scale. And I think one of the biggest challenges that we see that we're really trying to tackle is, as you think about those technologies, that needs capital.
Yeah.
And at the moment, I think there is actually quite a lot of very early stage venture capital focused on climate tech. So last year, venture capital had a terrible year. You saw a reduction globally in all types of venture capital, but climate tech actually grew. In this country, it grew to 11% market share. And if you look at the sort of large-scale infrastructure space, you are now seeing, the amount of dry powder that's being held by those funds to scale things is there. The challenge is this bit in the middle, which is this point around at what point does the technology get to scalability, commerciality? And there's a missing middle of capital between the venture and the infra, where something is too developed, needs too much money for venture, but is too nascent, too early for the infrastructure. And I think that's where more focus is needed from banks like us, insurers, public capital, government money to tackle this. And I'll give you a good example. We were just co-led a round into Geopora, which is actually the UK's largest green hydrogen producer at the moment, working with the UK Infrastructure Bank. And then that combination of us as coming in as a private investor, speaking to other investors, there were other investors like Sven coming in, and then the sort of involvement of the UK Infrastructure Bank, we need to see that model replicated at a much bigger scale.
So I'm trying to get clarification here on the time horizon to do all of this. You've given examples that are 10, 20 years. Are you, as kind of plugging that middle market hole, basically, looking at it from a multi-decade perspective, or is this something that's actionable within the next 10 years?
Well, I think it's got to be actionable because we need to see a significant reduction in emissions, a 40% reduction in emissions in this decade. So to avoid the impacts of climate change, there is an urgency to this. I mean, that's why we've set a target for 2030 of mobilizing $1 trillion of sustainable and transition finance in this decade.
Yeah.
Equally, why we have set financed emissions targets, i.e. the amount that the impact our financing has into emitting sectors, the hard to abate sectors, as well, of 2025 and 2030. And so in energy, for example, we've already seen a 44% reduction since 2020 in the amount of financed emissions, the emissions impact of our lending into the energy sector. That was our 2030 target. We're already there at 23, 24. And so we're very focused on this. And I think there is, we've seen how this can get scaled. 5 years ago, EV cars, I mean, obviously a lot of focus on EV cars, the slowdown in growth. But let's recognize 5 years ago, it was 1 in 70 new cars were EVs. We're sort of globally at 1 in 3, 1 in 4. So we've seen a significant shift. So yes, it's going to go up and down, but that trend we see there and it needs to get accelerated.
Where's the appetite going to come from in the next 5 years in the context of, by the way, the possibility that in the next 12 months, the Biden administration in the US and arguably some of the drivers even here in Europe aren't going to be as momentum driven around the green transition. I'm curious about where the appetite comes from. Who makes up the gap?
Well, so I mean, when we speak to our clients in climate tech and in the energy transition, I think stability is really important. So having clarity around sort of the regulatory environment that you operate in does have an impact. And as that changes, that does have an impact and will be a headwind. But at the same time, decarbonization offers, in many cases, efficiency savings. So we did a survey of small companies, medium-sized companies in the UK. 90% said reducing emissions they just thought was good business. And I think in many spaces you're seeing, even in the oil and gas, the focus around decarbonization of the reduction of their scope 1 and 2 emissions. So I don't see that trend changing significantly. Then the key bit is just these new technologies, how quickly will they get adopted in different spaces? And so, in carbon capture, we've seen the investment levels double last year. We've seen a lot of interest in carbon direct removals that wasn't there a couple of years ago. Hydrogen, we raised $250 million for Omnium, a green hydrogen company in the US. That was our 5th deal in 13 months in this space.
Yeah.
So I think you're seeing that activity. As you say, it's quite hard to predict how much it will wax and wane over the next 24 months.
So outside of perhaps checking the boxes that you need to from a regulatory standpoint, a carbon credit standpoint, et cetera, and hitting those climate goals, is there money in this? Is this a profitable venture?
Yeah, I think so, absolutely. Yeah.
And your clients agree?
Well, I mean, you can see the value that can get created by, again, obviously Tesla, the share price has come down, but there's a huge amount of value has been created along the way. We're seeing
and erased, and erased along the way.
No, sure. But I think if you came very early at that stage, you'd still be quite happy where you are, even after that rebound. So value does get created through this innovation, through this change. Valuations will go up and down in a period of time. But I think there's very much in the real economy and in the sort of investment space and the banking space, 100%. We're seeing, $1 trillion plus got invested last year in the energy transition, exceeded fossil fuel investment for the first time. $4 trillion is needed to get to us an IEA net zero pathway. That is a lot of capital that needs to be deployed into a lot of different companies.
But it feels like that return on investment is still what a lot of people on the sidelines need to see to really get behind this. And you already have kind of early movers like Barclays doing that. I'm curious when that moment will come, and I'm really simplifying this here, but that moment will come where people are saying, okay, well, some sort of green-related project is going to be more profitable from a money bottom line perspective than drilling in oil in, the panhandle of Texas, for example.
Well, I think, as I mentioned earlier, I think you're already seeing the money move, right? So the amount of investment in energy transition is exceeding oil and gas. So money's already moving, as you've kind of correctly challenged. And then if you think through some of the changes that we're likely to see, and I do agree, I think more to get to the level of capital we do need to do more. And so the introduction of, for example, the carbon border mechanism by the Europeans around effectively putting a carbon price around imports, the use of carbon prices more broadly, I think we're going to see that grow. The Inflation Reduction Act, that's obviously been a huge catalyst as well. That's created huge number of projects in the US. And so I think policy, capital, I do see this still coming together. And I think, yes, there are headwinds. There are always going to be headwinds. But there are opportunities here, I think, particularly at this level.
What do you need to see out of, I'm going to put the US on pause for a second, given the election risk dynamic there. What do you need to see in Europe? What do you need to see in Asia to see the momentum kind of get another boost?
Well, I think one of the really interesting things over the last 3 years actually is Asia, we've seen a really significant uptick. And the number of companies in Asia that are setting science-based emission reduction targets, the growth that we've seen in AUM, in ESG funds in Asia, the growth that we've seen in sustainable bonds in Asia. So actually, I think Asia, there is this big upswing. India saw one of the biggest globally increases in climate tech investment last year. China obviously has really gone after this. So I think Asia, there is this big focus. In Europe, last year we saw growth again across the board in this space. I think the EU New Green Deal, I think that will change things. And then I think this point around carbon pricing, I think companies, what is covered within the EU ETS scheme, so the carbon pricing scheme there, and CABM, that is driving a number of companies to look at this. Look, and it's worth saying that the biggest green financings that happened were around H2 Green Steel, Northvolt, all European companies, all thinking about the opportunity of clean power and how to put that into batteries, steel, these hard-to-abate sectors.
Very quickly, there's also a question of, if there is all this momentum, is the industry going to be able to catch up and meet that demand?
So, I mean, which industry now? Is the finance industry, the real economy industry?
I feel like that's the competition across everything.
Look, I think you've put your finger on one of the biggest challenges that we face, which is actually just coordination. And I think if you take, say, hydrogen, one of the things that's actually holding up hydrogen in certain sectors is the consumers of hydrogen need to invest to be able to take hydrogen. So whether it's steel companies or others. The producers of green hydrogen need to put projects into the ground to produce it. And both consumer and producer are sort of waiting for the other to get to your challenge. Okay, when is it going to be scalable? When is it really worth it? And so I think this coordination issue is actually the biggest thing that we have to tackle. And that's where I think these sort of new ways of financing, where effectively suppliers and consumers in the sort of real economy are coming together to put money into a project to try and tackle that kind of coordination across the value chain. That is a model I think we will see scaled again and again over the next couple of years.
You should put them on an IB chat. I'm sure it'll be a lot easier. Daniel, Hanna, we have to leave it there, but thank you so much for joining us. That 20 minutes go by fast.
Thank you.